Hello, inventors. Today I have with me a special guest, Lucila Valenzuela, who is a rock star at tax law. And we started chatting a little bit last week, and I can't believe I had no idea about R&D, research and development tax credits. So I wanted to make sure to bring her on and ask her all sorts of questions and see how we can help my clients, inventors and businesses, startups, everywhere out there who are doing research and development, getting some money back or some tax credits. Hi, Lucia.
Thanks so much for having me, Karima. I really appreciate it.
Lucia, tell us a little bit about you and your background and what you do.
Sure. So I am a specialist, a tax specialist. I'm a tax attorney by background, but I actually work in an accounting and consulting firm. And what I do for my clients is I help them save money on their tax bill, or in some instances, get refunds back from the IRS in the form of tax credits for work that they're already doing.
Tell us a little bit more about how startups, small businesses, or businesses in general who are doing any research and development, who are coming up with new inventions, can save. What is the R&D tax credit?
Yes, this is a question that I get a lot, and I'm also very surprised that a lot more people don't know about the R&D tax credit. But essentially, the credit's been around since the 1980s, and it was put in place by Congress because they wanted to keep innovation in the US and keep innovators innovating. So the credit is there as an incentive for folks who are developing products, processes, spending money on manufacturing processes. There's a couple different categories: product, process, invention, software, techniques. Those are all things that we could take the R&D credit for. At its core, you can boil down all of the R&D tax credit law to 4 rules. And if you have all 4 components to your invention or to the activities that you're involved in, then you can offset about 10 to 15% of your investment in that innovation through an R&D credit. So I'll just quickly go over the 4 credit criteria and see if you have any questions after that.
Sure.
So the first criteria is that you're spending time developing a new or improving on a product, process, invention, formulation, technique, or software. The second criteria is that you're doing activities that are technological in nature or rooted in hard science. So things like developing software is a pretty good example of a slam dunk, but other things like material sciences, or really just experimenting with any types of textiles or products and how to make them better. So rooted in hard science, nothing to do with soft sciences. The third and the fourth criteria are really where they make or break the claim. And that is that there's some sort of technical uncertainty at the outset of the project. That technical uncertainty can have anything to do with the method on how you're developing what you're developing, the capability of developing, so can I actually do what I'm trying to do, or the ultimate design. I'm not sure what the ultimate design is going to look like. So that's your challenge. The fourth criteria is that you have to have undertaken a process of experimentation, or put more simply, you have to have evaluated 1 or more alternatives to actually overcome that uncertainty, even if you didn't achieve the result. So, the best way that I like to explain it is like Science 101. There was a hypothesis, I tried it, I experimented, either it came out great and succeeded or it didn't. We see a lot of clients in the manufacturing space with process improvements to their manufacturing process, or just in how they develop the products that they're manufacturing. We see tons of clients developing inventions in the medical field. So medical devices is huge, especially with startup companies, or any type of formulation. I have clients that have packaging and do some innovation with packaging. I do this credit for companies that are in logistics, warehousing. It's actually a very, very broad area of law, and a lot of people still aren't really too sure of how to claim the credit.
This begs the question. So, for example, in patent law, there is a usefulness requirement, but that usefulness requirement is really low. As long as something is useful, it can be patentable. I mean, aside from other requirements. For the R&D tax credit, does it need to be something that is extremely useful, or curing something, or helping make something that did not exist before? And what's that threshold? So for example, say I am starting a LED light company and that's it. It doesn't do anything, but I'm planning on attaching a certain way to the edges of my desk, which wasn't done before. Would that be something that could qualify for the R&D tax credit?
Yeah, that's a really good question and a good example. So I think it's because we're attorneys, we always say the bar is really low because we feel like we can argue for anything. And it is similar. The bar is set pretty low on what qualifies for R&D, or maybe I should say it's a very gray area and there's a lot of arguments that could be made for what qualifies as R&D. To take your example, how I would qualify R&D in that case is if the light or the LED light was already something that was developed and you purchased that off shelf and you were developing the component that connected to your desk, that would be the component that you'd be claiming R&D credit for. So you wouldn't necessarily be claiming credit for that bulb that you went and purchased, but all of the materials that would go into prototyping that desk attachment, all of the time that you would spend paying anybody for labor costs or any outside contractor, all those costs could be put into a bucket, and that bucket of costs is what we look at, and that's what you end up getting 10 to 15% return on. So the numbers do add up very quickly, and there are three buckets of cost. It's supplies, outside contractor cost, and internal labor cost. Those are the three costs that we associate with R&D.
I don't know if this was not on the outline, so I don't know if you know the answer to this, but do you know if, for example, someone applied for a patent or had a patent issued, could they get a tax credit for the R&D that led to obtaining that patent?
It's very plausible. So there are still the R&D criteria that you'd have to look at, but there is a patent safe harbor rule built into the R&D tax credit codes. So when we talk about that 4-part test, if you have developed a patent, if you've applied for a patent or been granted a patent for the activities that you're claiming an R&D credit for, the parts of the test that are claimed or said to be satisfied by that patent safe harbor rule are 1, 2, and 3. You only have to prove or show documentation that you undertook a process of experimentation to overcome uncertainty. So the rules are a little bit easier actually to claim an R&D credit if you have a patent associated with that. Now, we still want to look at all of the other activities because sometimes patents are very specific for what you're claiming, but there's a lot more research that goes into that, whether it's like different products or a spinoff or something like that. So actually, just the work that you would do for a patent is just one portion or one project that we'd be looking at. But it's likely that there would be a lot more activities within the company that would qualify for the credit.
I have a question too. I was curious whether there are certain industries that lend themselves to getting or being able to qualify for these R&D tax credit in an easier way than other industries.
Yeah, there's definitely some industries that the IRS doesn't look twice at granting these applications for, and that is industries that are very innovative, like the medical device industry, or industries that are really developing products and are technical in nature. But I'm actually a specialist in the software industry, so I do a lot of these claims for software innovation. And with software, as long as you're adding functionality to software, we can claim an R&D credit for it. So we see a lot of SaaS companies out there that are developing software and then going out to market and licensing. They're getting R&D credits for all of that work. Manufacturing companies, we have a lot of CNC type manufacturing companies here in Orange County, and a lot of them claim the R&D credit for all their process improvements, how they prototype their products. And that goes for formulation companies as well, or companies dealing with some kind of product, ingestible products or anything health related. We have a lot of companies that are doing like tablet type work or those types of works that require dealing with materials like gelatin and capsules and powders and how those things will mix with different, other types of materials. So those industries that are developing products and processes are kind of the slam dunk industries. However, there are other industries that you wouldn't really think of being R&D. I'll add an industry to that as well, and that is the aerospace industry and defense industry. Those industries as well claim R&D credits a lot. But some of the industries that you wouldn't think that have R&D are industries that are a little softer, like typically marketing companies wouldn't qualify. But now we're seeing a big push in marketing companies to develop software that's innovative, or websites with a lot of functionality or applications. You also see a lot of software investments going into applications for phones or user-friendly applications from like banking industries or finance industries, where typically you wouldn't claim R&D credits for them. So it's a very broad range, and I can tell you I've claimed credits in everything from agriculture to golf product development. So it's very, very broad.
How far back can you go? Say, for example, I'm an inventor. I have this startup. I just recently found out about the R&D tax credit. How far back can I go to get the credit?
Yeah, so there's this awesome thing called the statute of limitations, which only allows you to go back for as many tax years that are open. Now, typically, and I'll say typically because there is some exclusions to the rule, for a federal credit claim, it's 3 years. So your statute of limitations will stay open for 3 years, meaning the IRS can audit you or you can amend your returns for 3 years. In California, that statute of limitations is 4 years. However, if you're an inventor and you have a startup company and that company's been around for 10 years, but you've never been taxable or you've been in a net operating loss position, you can actually go back a lot further than 3 years. So it's a very specific analysis that we'll have to do to see how many years, but typically it's 3 to 4 years.
Now, how big of a company do you need to be in order for you to claim these credits?
That's a great question as well, and I get that question a lot. I'll tell you that I have a company with 1 employee. She does geological surveys in Alaska, and she claims an R&D credit for the work that she does. And then I have companies with hundreds of employees that are doing software development or have hundreds of engineers on staff. So the analysis really doesn't come down to how many employees you have. More, I would think about how much expenses you have related to development of whatever you're trying to develop. So if you have about $50,000 to $100,000 of development cost, I would say you absolutely should be taking a credit. If you have less than that, it might make sense depending on what your tax position is. And if you have more than that expense, more than $100,000 of qualified research expenditures, you definitely have to be claiming the credit or you're missing out.
What if some of that research and development was purely like a scientist's time, for example, rather than going and buying big equipment or having to rent big equipment in order for them to do that R&D?
Yeah, it's actually kind of funny, Karima. The big equipment actually typically doesn't qualify for R&D because that stuff is capitalized on your returns. And so you're getting credit for it throughout the life of that big item. But the labor time, so the wages paid to whoever's developing the software or the product or spending time doing the research, that is where the money's really at. So if you have one person in a company who's being paid to do research, then that is likely what is going to qualify towards the R&D credit. And really, the only way I think about it is like it's a big bucket and we're just trying to find costs to throw into that bucket. And at the end, we're going to go do the calculation and figure out how much of that we can actually give you in the credit.
Now, I know I'm a little fuzzy on this, and I'm sure other people are too. Could you please go over the difference between a credit and a write-off?
Sure. So we call it above the line and below the line in the tax world. So there's something called a deduction. The deduction is what we call above the line. The deduction is going to reduce your taxable income. So how much income you're actually taxed on. So those are things like write-offs. At the end of the day, you have your taxable income, and then you're paying tax on that taxable income. A tax credit is actually more powerful than a deduction because a tax credit will offset your tax liability dollar for dollar. So you've already decided what your taxable income is, and then you get, like, let's just say a 20% amount of that is your tax liability. The credit will actually offset dollar for dollar that tax liability. So at the end of the day, we call it a dollar for dollar tax offset. Whatever you get back in credits, you're going to use to offset your tax first. And then it's going to carry forward on a federal level. The credits carry forward for 20 years. And in California, currently, the credits carry forward indefinitely. So let's just say that you only owe $20,000 of tax, but you got a credit of $100,000. You would use $20,000 of credit this year, and then $80,000 of that would carry forward with you for 20 years.
Do you have any fun stories that you want to share with us from maybe some businesses that you've worked with?
Sure. I have really great fun companies. I actually target and try and go after companies that are doing really fun, innovative stuff because the rules for R&D are very clear that you only have to be doing innovation that's new to you as the company, not new to the world. So I have a company that develops toys. And their toys are really great. They're outdoor type toys. And every time I go there, they ask me if I want to be a tester to their toys. And last time I was there, the company was developing one of those. I'm not really even sure what they're called, but they're those, when you used to go to fairs when you were a kid, somebody would throw a ball and they'd try to hit the target and then the water bucket, like you'd fall in the water bucket. Well, they were innovative and they wanted to put the water bucket above the person's head. And I got to test that out, and it was a really fun experience because not only, thinking about how that structure was made, how the levers were made, how the game actually worked, but at the end of the day, I got to, a bucket of water on my head. So that doesn't happen every day. I also love working with cosmetics companies because I always get to take products. And one year I was very fortunate to work with a company that was doing a lot of cool, innovative products that are organic. And so at the end of the day, I she gave me all the organic products they were working on. And so I got to stock one of my bathrooms, and then every single person that used my guest bathroom at my house would comment on these products. And I was like, I know every single ingredient that goes into that and all the blood, sweat, and tears that they put into that. So it's just a really fun experience. Every time I work with a client, I leave them in a better position than when I found them, which is also very gratifying. And I walk into all meetings bragging about how I have the best job. But at the end of the day, it's all about capturing that tax credit for the work you're already doing and not missing out, because traditionally only big companies with big advisors were able to take the credit. But now we have folks like myself at mid-sized firms or at regional firms who are here to help clients who are in that middle market, and maybe even just starting off. The other thing that I want to say that we didn't touch on is that in recent years, there's been a lot of great changes to the credit, and the credit's actually been expanded. So now if you're a startup and you don't have tax liability, so previously to this new rule, if you didn't have any tax liability, so you weren't paying tax, you really couldn't do anything with the credit, because if you took a credit, you got this credit, there's nothing to offset. So now what the rules have done is they've expanded the credit so that folks who are in a startup role can actually take advantage, even if they have no tax liability. So now, Karima, if you're a startup company and you aren't paying taxes, you're not making money the first year, but you're spending tons of money on development, what you can do is you can take the credit and you can use the credit to offset your payroll tax. So what you're doing by doing that is increasing your company cash flow, because it's one less payment going out the door. So I have clients that have claimed up to $250,000 a year in credit, and they've been able to save $250,000 of payroll tax credit. So it's just a really cool incentive for new startup companies that aren't paying tax, but are definitely paying employment tax to use the credit.
Can you carry any of that credit moving forward?
Yeah, so whatever you claim and decide to use as a payroll offset, that credit carries forward as well.
For example, I just watched this video and I'm really excited. How do I go next about cleaning my credits? How do I work with someone like you, for example, to make sure that I'm not missing out on anything?
Yeah, so every day I'm working with company owners and businesses to see if they have a benefit in the credit. So the first step is reaching out to somebody like myself to say, hey, can I qualify for this credit? After an hour conversation or just a quick review of financials, I can tell you what the likely credit range that you're going to qualify for is. And then you'd engage us for an R&D tax credit study. Usual study takes about 2 to 6 weeks and no more than about 5 hours of somebody's time at a company. Usually it's about 1 to 2 hours of somebody's time. We have to review documentation, financials, tax returns, and then actually get the claim together. The claim is filed on a tax return. So as long as we're done with our analysis prior to you filing your taxes, all we do is give the data to your CPA, or if your client is a CPA client of the firm, then I give it to one of my colleagues. But all we do is give that form to your CPA and they file it on your taxes. So it's a super easy process. It's just getting started.
Thank you so much for sharing a wealth of knowledge with us today. If someone wanted to reach out to you, what's the best contact information for you?
Sure. If somebody wants to reach out and get a hold of me, you can definitely contact me in my email, lv@hall, HALL, CPAs with an S.com. That's lv@hallcpas.com. Or you can call me direct at my phone number, 949-358-6793. And I'm happy to answer any calls.